Good morning, ladies and gentlemen. We hope you had a great time yesterday, and my name is Dushka. I will guide you through the Innovate stage today. Let's see how Web3 payments are impacting the online trading industry today. I will give a warm welcome to our moderator, Elena Sabelnikova, a business partner at Advanced Payment Solutions, who will introduce the panel.
Good morning, everyone. Thank you so much for joining us so early this morning. Well, day two, exciting, and I have very interesting panelists with me today, and we will discuss Web3 payments. We will discover the challenges, the new opportunities, and see what future holds in this industry. So please welcome our panelists, and let's start with the ladies. Ladies first. Nikita, please tell us about yourself, your expertise, and generally about yourself.
Sure. So, hi everyone. My name is Nikita Sachdev. I'm the CEO of Luna Media Corp. We're headquartered in Dubai with offices in Miami, Singapore, and opening up London Q1 next year. We've been in the crypto space in particular since 2017 and have now expanded to emerging tech, disruptive tech. Our bread and butter is Luna PR, which is a leading PR agency. And we also own the franchise for Cointelegraph Middle East. We produce a show on CNBC Arabia, which I host, called On the Chain, hits 50 million homes in the Middle East. We have a small VC, and we have a foundation, a charitable foundation as well, and that sums Luna Media Corp up.
That sounds great. Thank you very much. Kebbie, now your turn. Tell us about yourself.
Thanks. Good morning. My name is Kebbie Sebastian. I'm the founder of Merge. We offer bank accounts to crypto companies, and in terms of background, was previously with PayPal, Bank of America, led global product development, and founded a fintech advisory firm called Penser. Good to be here. Thanks.
Thank you. Now to you, Nabil.
Yeah, good morning, everyone. Nice to meet all of you. My name's Nabil. I work at a company called Worldpay. For those in the payment space, you probably have heard of us. For those outside the payment space, you probably haven't. We're the world's largest payment processor, so we enable businesses large and small in about 55 countries across all verticals to accept consumer payments. This year we'll process about $2.5 trillion, give or take, across cards, e-wallets, local payment methods, et cetera. And as it relates to crypto and Web3, we've been providing payment services to crypto companies since 2015, so coming up on 10 years now. So we enable all the world's large exchanges, fiat on-ramps, wallets, brokers, et cetera, to accept consumer payments.
Great, thank you. And Danat.
Thank you, Elena. Hi, everybody. Danat. I represent business. I work in business development for BVNK. If you're in the broker space, you probably already heard of us, or you're going to hear about us very soon. We offer a lot of product suites from BVNK. One of them is crypto processing, where we can allow our merchants to accept crypto, and we give them fiat on the other side. We offer virtual accounts where we issue dedicated IBANs to our merchants, and the third product is Global Settlement Network, where we can settle and collect from emerging markets in Southeast Asia, Latin America, and Africa.
Great, thank you so much. So to kick things off, Kebbie, would you share your view on current challenges in this industry and how Web3 payments can help us solve it?
I think challenges, I think, with respect to payments is time and cost. And if I think about time, I think it's 53% of B2B payments are credited within an hour, and 42% of cross-border B2B payments are credited within an hour for P2P. So clearly, that's not good enough. And I believe the cost ranges from 1.5% to 2.5%, whether it's B2B or P2P payments. So the traditional infrastructure lags behind, and I think that's the challenge. Whether Web3 payments or non-traditional payments can solve for that is probably the broader question, and I would say regulation is required. I think we're very early, and there is a lot of ground to cover in terms of giving comfort on counterparty risk, legal recourse, before it can go mainstream. And that's where we're at in terms of problem.
Thank you. Nikita, I remember you've mentioned you had some knowledge and expertise about that topic as well. Would you like to share about the challenges and how we can solve them?
Yeah, sure. So I'm with Kebbie on that one. Like, I think time and cost is the major challenge that we face, and also I guess there's some issues with countries in the sense of some I guess what I'm trying to say is inflation is a big problem right now with a lot of countries. So when countries like, I live in the Middle East, Lebanon, where a lot of people even struggle to withdraw like more than $400 a day. I think it's just like ownership of your own funds, your own assets is a issue that, I just add on top of what Kebbie said.
Great. Nabil, Danat, okay. Nabil,
Yeah, I might take a little different perspective. So I think in the last 10 years or so, actually on the cost side, at least in the consumer payment space, there's been a lot of improvement. I think if you rewind the clock 10, 15 years and you look at online or digital payments, it was predominantly card, like everyone was using card for everything and maybe a little bit of PayPal. Fast forward today, there are hundreds of local non-card payment methods around the world. Dozens in Europe, probably over 100 across APAC, dozens in Latin America, and a lot of those payment methods, at least for C2B payments, have brought down cost materially. And I don't know how much lower cost can go, because if you look at a lot of these fintech businesses, they're having trouble, staying in the black from a profit perspective. So I don't know how much more you can push costs down in the payment space, but the one thing that hasn't been solved, even though there's all these new payment methods, lots of choice, better consumer experience, lower cost, is the time piece. I think if you look at settlement times for consumer payments 10, 15 years ago, they're the same today. They haven't changed. So that was something people didn't care about in a zero interest rate environment because money was cheap. But of course today, when the base rate's 5 to 6% around the world and their cost of capital then is higher than that, people really, really care about, can I get my money a day or two sooner? It is probably a top question that I get asked from our clients. So I think on the cost side and the choice side and the UX side, there's been a ton of improvement in the last 10, 15 years. But on the time side, there's been close to zero improvement.
That's a little bit sad. And what do you think?
Just a quick comment. I think we also have to concentrate on the cross-border payments piece. With traditional methods such as SWIFT, you're taking some certain corridors. Let's take, for example, from Southeast Asia, you're sending money into the EU or the UK. Settlement could take up to 5 or 6 days, and you're paying 2-3%, if not more, at times. And so we have to innovate in the space on traditional methods such as SWIFT, and we can use blockchain technology. A lot of startups are coming into the space, for example, such as ourselves or other players who are innovating on stablecoins. There's players that are innovating on native tokens, such as Ripple. JP Morgan, who's already an existing, behemoth in the space, is working on their Onyx project, which is allowing, for interbank settlements through a private blockchain. So blockchain really solves that cross-border settlements piece wherein, you have much faster settlement times, milliseconds at times, depending on the congestion of the network. It's much cheaper. You're paying pennies on the dollar. And it's secure. Blockchain is much more secure than traditional methods. And 4, you can guarantee settlement. At times when you send a cross-border settlement, it goes through multiple banks, multiple intermediaries. The payment could get cancelled and returned. With blockchain, once it's sent out and confirmed, it's gone. It's going to reach the destination.
I just want to add one thing. I think when we talk about time, it's important to distinguish between time it takes the transaction to clear and then availability of the clearing system. So I think if you take like a wire, for example, if you send a wire, when the system is open, depending on where you're sending to and from, it should clear within like 30 to 60 minutes. It's not incredibly slow. But the problem is that pretty much all banks, they're not going to accept a wire overnight or over the weekend or on a public holiday. So actually, I think the time, again, when the system's available is okay. Now we can argue, should it be milliseconds or should it be minutes or should it be tens of minutes? But I think the thing where blockchain and things like stablecoins get interesting is they're available 24/7, 365.
Yeah, that's true. So talking about the stable coins, there is a lot of talk about CBDC. Some companies started to develop this technology, and some countries and governments are testing and trying to implement that now. So Nabil, what you look up on it? So how do we go about the CBDC?
Yeah, so I'm super bullish on that. I think it's when, not an if, in most parts of the world. I don't know if any of you are based in the UK, but if you are, or if you're interested in the Bank of England, Deputy Governor John Cunliffe, his term just ended about a month ago, and he penned this I don't know what the right term is, like a goodbye essay or a goodbye letter to commemorate the end of his term. And he talks a lot about how the Bank of England is, moving forward with CBDCs. And on that same vein, the Bank of England published a consultation paper about, I think it was over the summer, like 4 or 5 months ago. It was the most responded to consultation paper in the Bank of England's history by a wide margin. So I think if you kind of read the tea leaves in the UK and in Europe and in parts of Asia, I think CBDCs are definitely coming. Now, that's going to take a long time. It's going to take 5, 10 years, if not longer, and there's a lot of questions that need to be answered before those things launch. But I think from a payments perspective, what's interesting about it is in a lot of countries, there's this concept of legal tender. And so, for example, in a lot of countries, it's actually legally required that businesses accept cash. And so as a payments company, what we think about is, as CBDCs come online, what does that mean for us and our clients in terms of acceptance and risk management and reporting and reconciliation and technical integration and all that sort of stuff? Because we operate in 55, 60 countries, give or take. And when those CBDCs come online, it's likely that it's going to be legal tender in many of those countries. And so our clients are going to have to accept it as a form of payment, which means if we want to be competitive, we're going to have to support it as a means of payment.
Yeah, sounds like a good plan. Kebbie?
Can I take a different point of view, which is I am not as bullish on CBDCs for 2 reasons. Number one, the likelihood that any country would give up a key instrument of monetary policy is very, very low. And 2, no doubt in time it will take off, but I guess when is the question. And without China, India, and the US getting behind crypto and CBDCs in a big way, you do not have a bloc that represents 40% of the world's population and 53% of the world's GDP getting behind something. If that does not happen, this will not take off. And that is a while away given current circumstances, which is why I think amazing in concept, but until a while before we see practical.
That's true. It's going to take a long while. Nikita, you've had some perspective on that as well.
Yeah, so I think I'm with Nabil on this one. I think CBDCs are an integral part. So I come from a very heavy Web3 background, and I don't think that we're completely there. We're not completely in Web3 yet, and CBDCs presents a perfect use case of Web 2.5, which I believe we are. On what Kebbie said, I believe China's already implementing CBDCs, and I think there's over 20 countries that have already, are exploring heavily how to implement CBDCs. So I would say even quicker than 5 years, we will see some countries start announcing, and I know Abu Dhabi will be one of them very soon to announce, a central bank digital currency for the UAE. I feel, in the Web3 space, I see there's a lot of, there's a bit of a love-hate relationship with CBDCs. You get people that love it, people that hate it. The crypto maxis believe that it's not representative of cryptocurrency, but the reason why I'm bullish on it is because I feel like it will allow for more mass adoption. Cryptocurrency is still very daunting for a lot of people to come in, so it allows users to at least still feel like they're trusted and protected in the hands of the government. And at the same time, I was speaking earlier on some, inflation in Lebanon as an example. I feel like CBDCs will provide more transparency with how, money moves and, I guess the supply and the supply of money for certain countries. In El Salvador, Bitcoin is legal tender. So in this case, Bitcoin as legal tender has not provided the best use case for El Salvador. So I think CBDCs is an alternative, not comparing it to cryptocurrencies, but I think it's a perfect middle ground behind cryptocurrencies. And if the governments don't move on to this, onto 2.5 CBDCs, then they will fall fall back, and because cryptocurrencies, the use cases are expanding, and there will be more people to start using it, more use case peer-to-peer transactions, and it'll slowly, I think, take away from the actual use case of fiat. So I'm glad to see that governments are implementing CBDCs.
Great, thanks. Yeah, that's true. I've seen myself and our company also develop some technology that builds a CBDC for some governments, which we're hugely involved right now, but okay, it's time to go. It's not going to happen tomorrow. Well, if we leave aside for now CBDCs, what other successful experiences are there for solving those challenges and to implementing innovations? I remember, Nikita, you mentioned you had a wide experience on those. Would you like to share successful use case?
Yeah, so I think so Web3 is like a more broader umbrella. Like cryptocurrency is probably one aspect of Web3, but under the Web3 umbrella, you have so many different ways that Web3 new technology is helping with payments. So for example, with the blockchain protocols, you have smart contracts that are able to facilitate transactions without any middleman. You have NFTs that are providing you ownership. You have cryptocurrencies, which are helping remittances, cross-border payments, peer-to-peer transactions, micropayments. So we're already seeing tons of use cases for cryptocurrencies, and some of my favorite use cases are Ripple. I think Ripple's done a great job at not only just standing its ground fighting with the SEC, but in Dubai, DIFC just approved Ripple XRP and Toncoin as as a mode of utility for payments for their 4,000 plus portfolio or ecosystem companies. So that's a use case happening right in front of our eyes. It gives it more value. Another use case that I really like is one of the companies that we invested in called Ubit, which is a tap and pay for crypto, not linked to any credit card. It's just connects to your decentralized wallet, and you can tap and pay. And I've been using it around. I go to Starbucks. I just pay. Nobody knows what coin I'm paying with, and I think that's the best part of Web3 payments is when the end user cannot even tell, because as I mentioned, the technology is daunting, but users should not be able to feel that, and that's what's going to bring mass adoption.
Well, that's fantastic. It's very useful. Kebbie, I feel like you had something to add. No? Okay, great. So let's move on to the next topic and talk about how can we widen the user experience and our database in general, how we can implement with our customers these new technologies. So who would like to start on that and about expanding our database? I think Danat is.
Yeah, I think you can look at crypto payments as an alternative payment method in order to acquire a new customer base, whether it's going for a new geographical location, expanding it to a new geography, whether it be an emerging market or an existing onshore market. You can also look at a whole new sector of people who hold their wealth in crypto and make their money in crypto. So, by offering crypto payments or Web3 payments, whatever you want to call it, as a merchant on your website, platform, application, whatever it might be, you can start looking at expanding into new regions without actually having to set up, offices in the region or getting the correct legislation in the region. As long as your license permits you to operate globally, per se, you can start expanding into emerging markets. Without having to physically expand there, right? Because you're offering a new method of deposits and payments, and as long as your end customers have some sort of crypto balances or have some sort of access to crypto, you can start receiving deposits and payments in crypto. And then also touching on a piece of a whole new market, targeting a whole new audience, is, as I mentioned, a lot of people made their money in crypto or hold their wealth in crypto. So you can start targeting new audience in that space, and increasing your customer base as we discussed. And a lot of the brokers who are at these conferences and brokers outside of this conference, they're already implementing this technology and using this technology and seeing incredible rise in deposits, and their sole job is to increase their bottom line. And how do they increase their bottom line? Is they get more deposits into their platform. So what you can do is you can bring in new alternative payment methods. Crypto is one of them, and they've already been doing this for a while, right? And we also see vanilla industries coming to this new payment method, such as Farfetch adopting crypto payments a couple of years ago, and apparently it's been really successful for them. So we work with a lot of brokers as well, and we see cases where when they switch on this payment method of Web3 payments, they have a 300% rise in deposits within a couple of months. So, I mean, the whole industry is moving that way, and we're going to see a lot of vanilla clients come into the space as well.
Good, Nabil?
Yeah, I would say two things. So we've done a lot of education with our clients, both in the kind of Web 2 and Web 3 space around, in particular, how stablecoins can help them get their money quicker and over the weekend and public holidays and things like that. What we found is you kind of need to find the one person at a client that like is kind of geeky and nerdy and passionate about this stuff, and then they become like the champion internally. So I go talk to a client, I might go talk to a treasurer, and they like, oh, okay, cool. You go talk to the CFO, oh, okay, cool. But you find like the one person in their organization that is like really passionate about this stuff, and then they just become your like ambassador internally, and then you arm them with the information they need and the benefits, and then they educate their organization. So we spend a lot of time kind of finding who are these champions at our clients. And then the second thing, not specific to Web3 payments or stablecoins or anything, is just when we think about adding anything as a payments provider, whether it's a new local payment method or a new settlement currency or a new risk management product, the thing we always think about is how do we make it easy for our clients. And so, for example, with Worldpay, we offer stablecoins as a settlement currency, but there's no difference in integration. There's no difference in the API calls you send us. There's no difference in the reporting and reconciliation files you received. It's the same as if you accepted a settlement in Euro or GBP. It just happens that the currency is labeled USDC. So I think when we think about Web3 stuff, for lack of a better word, that we want to embed or bring to market, the number one question is like, how do we just make it easy for our clients to adopt?
What are the best success stories of how do we make it easier?
I think for us in the payment space, it really is, do you have the product, which in this case we would call stablecoin settlement, but then do you have everything else around it that they're used to for accepting other payment methods? So I would say the reporting and the reconciliation actually is very important for a lot of our clients. If you offer them a payment method or a settlement currency and you tell them, hey, we can offer you this, but it's not going to integrate with your existing Worldpay reporting and reconciliation files, they're like, I don't want to deal with it. I don't want to do a manual reconciliation. I don't want to bug accounting about this. Like, it just creates a lot of friction.
Yeah, true. Nikita?
Yeah, so when it comes to, mass adoption, I feel like that's my forte. Being a Web3 media company, we're constantly just trying to explore ways to just get the word out there, and that was how I started my journey in 2017. Made a Instagram video of how amazing Bitcoin was, went viral, and became the host of Huobi Exchange in Singapore. Since then, I've been very passionate about getting this kind of foreign technology out to the layman, and I think it boils down to having strong tech, filling a gap that's required. Once you check those boxes, the next thing is kind of going to market and taking it to the masses and making it easy for them to understand. And that's what we do. So we've seen incredible tech that doesn't go anywhere because of, I guess, lack of marketing, lack of word of mouth. It just doesn't get known. And then we've seen companies that are kind of like so-and-so, and we know there's better out there, but they do an amazing job at their marketing. So a little biased, but I definitely think it falls in the hands of media exposure, education, and content, and basically bringing it out to the right audience.
Thank you. Kebbie?
I'd say payments is a 1% business, right? It is a low margin business. So unless something can get scale, it's not very helpful. What is preventing, what would enable scale is two things. There's a challenge with volatility of currency, right? So stablecoin offers a good way out. However, stablecoins are now 120 billion market cap, of which 70% is USDT and 15% is USDC, which is a rounding error in the world of payments. And so what you really would need to solve for is two layers: identity, who's my counterparty, and recourse. If something goes wrong, there's a way to get recourse to my funds. And that is only underpinned by regulation. As much as we may, or some may not like it, until there is that regulatory landscape that has clarity, it is a challenge. But so I think very bullish on the potential of stablecoin payments, but it is very, very early. And these are the things that need to come together to get mass adoption.
I want to add something to that, actually, is super interesting. When we launched our stablecoin products, one of the, I don't know if issue is the right word, but one of the questions we had to answer that was really, really interesting that I hadn't thought about was, when we settle payments to a client in fiat, we settle it to their bank account. And typically, regulators and the likes of Visa and MasterCard will require you to settle a client's payment to a bank account that's in the same name of the entity that you process the payment for. So for example, if I process payments for Uber UK, I can't settle that to Uber US or to Uber Europe. I have to settle it to Uber's UK entity, the same entity that I processed the payment for. There's some exceptions to that, but by and large, you have to settle it to the same entity. So we validate that the bank account details that the client has sent us match the name of the entity. We get a letter from the bank, or we ask for a bank statement or a voided check or something like that, some way to prove, so that if we get audited or a regulator asks or Visa, MasterCard asks, we can show that, hey, we're following the rules. When we started offering stablecoin payments, we needed a wallet. But how do you prove what entity owns a wallet? There's no concept of a wallet being associated with an entity. You kind of just take the client's word for it. So there's all this kind of complexity when you think about, hey, great, I can send you a stablecoin payment, but how do you prove that you own the wallet, or which of your myriad corporate entities owns the wallet, and how can you demonstrate that? It's actually a question that a lot of people haven't solved.
Just conscious of time, just quickly to add to that, going a step further, if you're accepting payments from retail clients and they have a wallet with an existing exchange, like Binance, for example, or Kraken, when they're sending the money to you, they're sending it from an omnibus account, which belongs to the exchange, but when you're receiving it, you have a dedicated address. So the address that you're sending it from and then you're receiving from are completely different. So now you go into stuff with AML concerns, so on and so forth. So we have to solve for that issue, and how do we prove that the wallet actually exists under your account, under your name, whether it's taking videos or screenshots, or some sort of DeFi AML KYC solution that exists there to prove that these wallets actually belong to you. So interesting to see how it's going to be, what the innovation is going to be in the space.
And that's a good approach, because now we're going to move to security. So how do we make sure that our Web3 payments are secure and the funds of our clients are secure? What is it there that we have implemented already, what we're lacking, and what is it that we need to be looking forward to and try to push?
Yeah, just quickly taking this. I mean, given my experience working for a crypto custodian, regular crypto custodian previously, I think it's very relevant here. With the fallout of FTX and other companies within the space that, when the domino trickled, 3 Hours Capital was gone, BlockFi, Celsius, you name them, all of these companies came out and gone bankrupt. We see a lot of security concerns. So payment providers need to ensure they're regulated and licensed by a reputable regulator, right? In the case of FTX, we're regulated by the Bahamas. So, I mean, how strict is the regulation there? If your payment provider has a license from the FCA, for example, you as a client can be confident in your provider. And the payment providers have to implement the right control securities and measures. If you have the right licensing, the regulator verified you for the controls measures, so your clients can be confident in you. And then you have to follow stuff like never commingling funds, segregating assets, having internal or external audits, having the right controls in place, and even the people, right? The people with the correct background to look and safeguard, your assets, your payments. And so, given the bad press that we have from the different fallouts and security concerns of all these, bad actors that I've mentioned, I think we should start regulating and implementing traditional measures into this new industry. And again, looking forward to how that's going to happen.
That's really interesting. So what does Worldpay do for that, for security?
Yeah, it's a good question. I think in the payment industry, security standards are pretty well defined. There's a lot of clear standards. So some of you maybe have heard the term PCI DSS, Payment Card Industry Data Security Standards. So there's a very clear set of guidelines and 3 levels of compliance. 1 being kind of the bare minimum, and 3 being the top tier. And so I think actually as it relates to crypto and Web3 payments, I think for folks in the industry actually getting behind some of those bodies or those parties that are trying to set standards and bringing in trusted third parties to validate some of that actually would be really helpful. One thing I'm really excited about, for example, which is kind of nerdy, is Moody's, the credit rating agency. They're about to launch a rating product for stablecoins. So they've basically picked the 24 top stablecoins, and they've done risk assessment across 5 or 6 different risk factors. And that might sound kind of boring, but actually when you go talk to like a bank or a client in the financial services space or really any large enterprise client, you start talking to them about stablecoin settlement. If you can just bring that Moody's lens and say, hey, you know, we're talking to you about something and we're only talking to you about USDC or PYUSD or whatever, and these are 2 like top ranked ones from Moody's and it's got their stamp of approval for security and liquidity and transparency and all that, that actually carries a lot of weight. So I think third-party standards and bringing some of those traditional firms in TradFi or Web2 that have provided a lot of that independent opinion and guidance on those topics will be really helpful.
That's great. Thank you. Nikita?
I think it's just a matter of time before we start understanding how to regulate the space a little bit better, which will lead to more security. It's funny because CZ stepped down as CEO yesterday from Binance. And, you know, it caused a little bit of stir. You know, it made people, some people, I'm included, kind of want to go on Binance and just make sure, like, should I move my funds? Like, is this going to kind of move the market a little bit? Because of what happened, and what happened with FTX is nothing even close to, like, what happened. But what happened with FTX is just lack of understanding. I wouldn't say lack of regulation, because they were regulated in several entities, including Dubai, which they don't, you know, not a lot of people talk about, and licensed by Vara. But why did it collapse is just, I feel like it's still a bit of lack of understanding on how the space works. They were audited by a top 10 auditing agency, traditional, not even crypto. And at the time, no one talked about this proof of reserves. And all of a sudden now, for example, proof of reserves has become, you know, a thing to start looking into. So I just think it's a learning curve, and within time we will understand a little bit better how to regulate the space, and I feel more better regulation will help contribute towards more security, at least when it comes to centralized assets. Like first of all, like a lot of the Web3 like crypto companies that we talk about that lack regulation are not completely Web3 because they're not completely decentralized, they're centralized. So it's just kind of, again, going back to what I said about that Web 2.5 is understanding how to regulate Web 2.5.
And Kebbie?
To me, security is a function of 2 things: oversight and standards, as Nabil mentioned. So what I imagine will happen, the tech that drives the security will keep changing, but the common themes will be the oversight and the standards. If you contrast to what is considered a more secure platform in the banks, banks today spend 10% of revenue on average on compliance and oversight. Fintech platforms spend 3 to 5% of revenue on compliance and oversight. So what will happen is that the delta on pricing will get withered away for crypto companies because they need to comply and have oversight in order to be secure. And so you won't have much of a cost difference, but they'll be secure. You will have the speed difference back to that cost and time. You will still have time difference and a significant advantage just because of better tech. I think that's how it'll play out.
Thank you. And I guess the final question is, we're a little bit running out of time. So in everything that we've said and thinking and looking at this fintech revolution and Web3 payments, how traditional financial institutions can catch up, follow, and be together on the same curve of development? We've mentioned CBDCs. Anything else except that? Anybody would like to?
Yeah, so we're already seeing that with the Bitcoin ETF applications coming up soon, and I think it's going to be a great use case. I think there's what is it, like 12 applications or something like that. So I think that's already a great step forward.
Great, thank you. Anybody else, guys?
I think like don't be afraid to have 1 or 2 people invest some time in it. That's how it started for us. We had like 1 or 2 people that were interested in the space, and you know, they started to do some research. They came up with a strategy of how we could fit into the space. They presented an investment case, and the executive team said, "Okay, go for it." So I think like just encouraging people in your companies, if they've got a passion or an interest, say, "Hey, why don't you spend 10, 20% of your time, come up with some potential use cases for how the technology or the currencies or whatever it might be can benefit our clients and our business?" And then I think you'd be surprised. People can be pretty open-minded if you put some rigor behind it.
Great.
Yeah, just a quick one. We're already seeing a lot of these traditional giants come into the space. You know, HSBC tokenizing gold. We're seeing, as I mentioned, JP Morgan building their own X project for cross-border settlements, and you know other products that go under that project. We are seeing multiple of these banks come in and trying to innovate on the blockchain, whether it be in payments or tokenizing funds, tokenizing gold, or as Nikita mentioned, the ETFs. So these behemoths or giants, they know the value, they understand the industry to a certain extent, and they're coming in. And once they come in, there's going to be a lot of volume coming our way, so get prepared.
Everybody's excited, I hope. Well, thank you very much. It was so interesting and exciting information that we just heard. We have about 4.5 minutes, and happy to take some questions from the audience, maybe a couple of questions for our panelists. Anyone is interested to ask something? No, great. Thank you very much, guys. It was a pleasure to have you today. Thank you for joining. Thank you, dear panelists. It was a great pleasure to see you today. Thank you.